good afternoon and welcome back everyone to our Options Education webinar series. My name is Tony Zhang. I'm the Chief Strategist here at Options Play. And today we're going to be talking about technical analysis, specifically how to trade with the trend. We'll be diving into specific technical indicators, specific parameters, specific thresholds. But at the core of it is really a trading strategy that has been in my trading book since pretty much the very beginning as a trader. This is one of the first strategies that I've learned as a trader, and here I am sharing it with you. It's a fairly simple strategy. It's a fairly simple one to understand and dissect. And hopefully by walking you through the ins and outs of this strategy, it gives you insights into how simple a strategy of trading with the trend can be, and also gives you the foundation for potentially building your own strategy using your own indicators that you're perhaps more comfortable with than the ones that I am using. So let's go ahead and get started. What we are here to do every single week is to make sure that you have the proper education for trading, specifically empowering you to trade sustainably and confidently, making sure that you have a well-rounded education so that you have different aspects that are required in order to trade sustainably in your portfolios. That's what we are here to do every single week, and hopefully that's what I'll be able to share with you during today's session. We do this every single Thursday from Options Play. Now, before we get started, what we are going to discuss here today is purely for education and demonstration purposes. It is not a solicitation or recommendation to buy or sell any of the specific securities that we'll be using as example purposes during today's session. So what we'll start off with is I'll give you a little bit of a review of my trading background, just to give you a sense for how long I've been using this one strategy that I'm going to show you here today. It is by far the longest standing strategy in my trading book. And what I'll do is I'll go through everything in detail as far as how the strategy works. But before we do that, I want to talk a little bit about the difference between trend following and counter trend. I tend to see that there seems to be different ideas that people have with one or the other as to which one's better or worse. So I really want to discuss the pros and cons of each one and make sure you understand what we're trying to achieve here today with the trend following strategy. Then we'll talk a little bit about the strategy construction, the specific indicators, the parameters that I use for these indicators, and then we'll go through a few examples to show you charts that reflect the strategy, when it works, when it doesn't work, what you need to look for. And then more importantly, I want to show you how you can scan for these specific trading setups using Options Play before we open this up for Q&A here at the very end. But the primary thing, my primary goal here with this session is to provide you with a proven strategy for following the trend. And this requires two things: a foundational knowledge of how to create a trend following strategy using common technical indicators. Like I said, what I want to do is I want to break it down for you using a commonly used technical indicator so that you understand how I use it, but I also want to make sure that you get the framework behind it so that you can potentially rebuild the strategy using your own favorite indicators and perhaps different parameters. It's really important from my perspective when you're learning technical analysis to not just follow someone else blindly, but understand why the strategy works, how it works, when it doesn't work, because that's how you're going to be successful in the long run. And then I specifically want to show you the specific parameters and thresholds that have been back tested to show strong performance with this specific strategy, and why I have used the same indicator with the same parameters and the same thresholds for 15 plus years of my trading. So many of you are going to ask, can you get access to the slides? Can you get access to the recording? And the answer is yes to both. But to access the Options Play platform so that you can actually scan for the opportunities using the indicators that I'm showing you here today, you need to have a free 30-day trial or a membership to the Options Play platform in order to utilize those scans. And you can If you obviously have a membership, you'll be able to utilize these scans immediately after we show you here today, or you can sign up for a free 30-day trial at optionsplay.com/sign up, or point your phone to that QR code on your screen. It takes literally 10 seconds to sign up for that free 30-day trial, and that will give you access to the platform as well as the slides and the recording from today's session. So let's jump into it. Let's first talk a little bit about my background. Now, I've been a market strategist for 18 years, working with both retail and institutional traders over those 18 years. I have at this point worked with thousands of traders, helping them understand everything from technical analysis to intermarket analysis, to trading psychology, trading mindset, portfolio construction, and just helping people understand kind of how to navigate the broader markets over those 18 years. Now, I started my career, many of you know this, but some of you may not, in currency trading or FX trading. I worked for a company called Gain Capital at the time. We serviced both retail traders and many of the major brokerage firms in terms of offering institutional Forex solutions for those brokerage firms. That's really kind of where I spent a lot of time talking to retail and institutional traders. And that's really where I learned this specific technical trading strategy, specifically a trend following strategy. During 2007 is really when I first got introduced to this particular strategy. At the time, I was trading E-mini futures. The S&P E-mini futures is when I first started using this strategy. And the great thing is that this is a strategy at the time I was using on intraday tick charts on E-mini S&P futures. But the beauty of technical analysis is that the exact same strategy with zero modifications is what I have used throughout my entire career to trade futures, to trade Forex, to trade equities, to trade options across all these different asset classes, across different time frames. I've been able to use this exact same strategy to find reliable trend following trade setups. And this is always the first scan that I will set up whenever I come across any type of new scanning tools or tools that I generally use for trading, any new platforms that I sign up for. I always build this scan first to get a sense for how that platform works, because like I said, this is my go-to strategy, and this is by far the longest standing strategy in my portfolio. Okay, so that's a little background as to what I'm going to be teaching you and who you are listening to. So let's kind of break down technical strategies, because I'm going to focus this month on some of these technical strategies. And today we're going to be talking about trend following. And trend following, I would say, is a pretty popular strategy that many traders will use. And you can think of trend following as simply going with the trend, and you can think of counter trend as kind of going against the trend. And there are pros and cons to each one. So I want to make sure that everyone understands the difference between the two, truly what the difference is between the two, because I tend to find that traders put themselves in one camp or the other. A lot of traders will say, I only traded the trend, or sometimes will say they only trade against the trend. And I try to kind of show investors that there's merit to both, that you should not just limit yourself to one or the other, because I do seem to see that a lot of people are not expanding their horizons and either only trading with the trend or only going against the trend. So to start off with, let's talk about trend following. And this is just because it's fairly natural for a lot of people to follow the trend. These types of strategies typically have higher probability of success. So when we talk about backtesting win rates or success rates on these types of strategies, they range somewhere between 55% of the time to 65% of the time. You'll see win rates on these kind of trend following strategies. Any trend following strategies that have win rates greater than 65% usually have very low frequency in terms of the number of signals that are generated. So, when you do see win rates on these trend following strategies that have greater than 65%, you usually need to take that with a grain of salt and dig a little deeper in terms of the actual numbers themselves. And this comes from, nearly a decade and a half of backtesting experience, building backtesters, doing a large number of backtests of technical indicators, and just experience from trying a very large variety of trading strategies, trading indicators, and seeing how they perform. That's kind of how I've built my knowledge as a market strategist, is building these types of strategies, backtesting them so that I can speak to kind of the efficacy of just about every single strategy. You name a strategy, and I've heard of it and tested it using some kind of back test to get a sense for how well it performs. Now, the thing about trend following strategies is that it generally has what I consider moderate risk to reward ratio. These are not the best risk to reward strategies. And I'll show you kind of what we do to try to maximize the risk to reward of a trend following strategy. But naturally, whenever you're following the trend, in order to follow the trend has already been established, which means that you are sort of, to some degree, already late to the game. And what you're trying to do is you're trying to play a little bit of catch up now that the trend has been identified. And whenever you're playing catch up, the risk reward is never going to be the most favorable risk reward setups that you see here in the markets. And that's a really important thing to understand. Does that make sense, everyone? That when you're following the trend, you tend to have a higher probability of success, but because the trend has already been established and you're already somewhat late to the game, your risk to reward in those trades are never going to be the best risk to reward trades that you make. They're always going to be moderate, and we'll talk a little bit about how you can confirm that. So please type 1 into the chat window if that makes sense to you, okay? So the good thing about these trend following strategies is that once you've identified a trend, you can find multiple buy signals within that trend consecutively. You can get 2, 3, 4, 5, 6, 7, 8 consecutive buy signals, one after the other, continuing to trade the same symbol week after week, month after month, sometimes for months on end, with these types of trend following strategies. And for some people, that's easy to do. It's a symbol that you're familiar with. You like trading one symbol, you're familiar with the chart, and being able to trade it multiple times with one indicator is many times easy to do, and it feels natural to go with the flow. You're trading with the trend. That's kind of generally what these strategies look like, okay? And on the flip side, going against the trend, this part feels a little bit more unnatural for some people, because a lot of times when you find these kind of counter trend ideas or going against the trend, a lot of people will say, "What are you doing? That's so risky. It's like trying to catch a falling knife." These strategies will have lower probability of success because what you're really trying to do here is you're trying to identify the start of a trend. You're being that early adopter, and when no one else has seen the trend, you're trying to identify that very early turn when something goes from either bullish to bearish or from bearish to bullish. Naturally, when you do that, you have lower probability of success. But because what you're trying to do is identify the trends earlier before everyone else, these types of trades are the ones where you're going to have the best risk to reward, the best possible opportunity to make the most amount of that trend while risking the least amount possible. Does that make sense, everyone? Please type 2 into the chat window if that makes sense to you. And this seems counterintuitive for some people. A lot of people will tell me counter trend trading is riskier, you're risking more money. It's the exact opposite. You're risking the least amount of money in this particular case. Because if you think a bullish trend is going to reverse into a bearish trend, if you get into the trade and the trades that keeps going higher, that's an immediate feedback that you're wrong and it's time to get out of the trade. You risk the least amount relative to how much you can potentially make if you are correct and you get into that trend at the very early start of it. Because if you're able to get into a trend at the very early start, that's when you have the maximum gain potential on that trade. And that's a really important thing to think about when you think about counter trend trading. A lot of people write off counter trend trading because of this one fallacy, but we will cover that here next week, counter trend trading and how to identify counter trend setups. So today we're going to focus on on trend following setups. Now, these types of strategies will typically trigger very few signals, meaning it's not often that you think a bullish trend is going to end or a bearish trend is going to end. It takes a fair amount of time. These trends don't change very often, and when they do, they happen very quickly, and sometimes you miss them. So you don't trade these types of trades very often, and many times it feels very unnatural to go against the trend, and this is why a lot of people avoid this type of trading. So one is not better than the other. It's just important to understand the characteristics of each one and understand what the pros and cons are when you're trading one. And I don't believe that you should stick to one or the other. You should use both in your trading setups. You should use both in your portfolios. And it's just important to identify and delineate between the two. Okay, so let's talk a little bit about the construction of a trend following strategy. Now, the mechanics of it is actually relatively straightforward. What you're trying to do is you're trying to first identify a primary trend, meaning a primary trend means that a stock is moving significantly either higher or significantly lower. It's as simple as that. And typically what we do is we use a longer period momentum indicator. Now, most momentum indicators, if you think about RSI, stochastics, those types of momentum oscillators, they usually use anywhere between a 14 to 20 period parameter for those types of strategies. That basically is 3 to 4 weeks worth of price action that is used to calculate what the current momentum is. Now, from my perspective, that's not enough. You need a longer period, 30 to 50 periods. Now, if you think of that in terms of calendar weeks, that's from 6 to 10 weeks of trading history that is used to calculate kind of that momentum indicator. And that's going to help you identify the larger primary trend. That helps you establish the trend. And what you don't want to simply do is just follow the trend blindly. What you want to do is you want to maximize your risk to reward. And how do you do that? What you look for are small counter trend moves to that primary trend. So what you use in conjunction with a longer period momentum indicator is I typically will use the exact same indicator that I'm using for the long period one, but I'm going to use a much shorter period momentum indicator, usually anywhere from 5 to 9 periods. So basically 1 to 2 weeks worth of price action. So I'm looking at 6 to 10 weeks for the longer term time frame and 1 to 2 weeks in the shorter term time frame. So what I'm trying to identify is a trend that's trending higher or trending lower. And then what I'm trying to identify is a bit of a counter trend in that primary trend. And what I'm looking for is that trend to resume, right? So what I'm trying to do is I'm trying to enter that trade as close to this bottom as possible so that I can capture as much of that subsequent continuation of that trend as much as possible. So that shorter period momentum reverses back towards the primary trend. That's going to be your entry signal to get into the trade. So not rocket science, relatively simple, and you can use just the same indicator, but using 2 different periods of that indicator to help you identify the primary trend, a counter trend, and then a resumption of that primary trend. Does that make sense, everyone? Please type 3 into the chat window if that makes sense to you. Perfect. Okay, so now let's look at an example, and we'll look at kind of the indicators themselves. So what I have here are my long period momentum and my short period momentum. And what I use is I use a different construction of the charts just to make it a little easier to visualize. And I kind of overlay the long period momentum and the short period momentum on the same chart just for visual purposes to make it easy to see. So what I have is a long period momentum. And what I'm looking for is that long period momentum to either be positive in a bullish trend or negative in a bearish trend. But I'm going to use positive bullish trends here in my example. So what I have here for my long period momentum is a 50 period CCI. CCI is called the Commodity Channel Index. there are so many indicators. There's RSI, there's rate of change, there's MACD, there's all types of indicators. Stochastics, William percent R, I can go on and on and on. There are dozens and dozens and dozens of them. I like to use CCI. It's what I learned this strategy on, and I've just stuck to it for years. I generally have not found a huge difference in terms of performance, regardless of what strategy or which indicators you use. But I happen to use CCI, and I specifically use a 50-period CCI. And I have this red mountain chart at the bottom of my chart, because the mountain chart just lets me easily visualize when it's positive or when it's negative. A mountain chart is either a mountain or a valley, depending on whether it's positive or negative. So as you can see throughout this chart that I have here, the long period CCI, the 50-period CCI, remains positive the entire time. And what that tells me is that there's a primary bullish trend going on here in this chart. And it doesn't take a rocket scientist to look at this chart and say that, oh, that chart is trending higher, right? You can do it just by price action alone, but the indicator gives you that confirmation. So when you do get a pullback here in the primary trend, does this long period CCI remain positive? As long as it remains positive, that is a valid trend following strategy. And what I'm looking for is the short period momentum to get oversold. That's that blue line. And the blue line is that 5-period CCI. So I'm using a 5-period CCI, basically a 1-week look back of the price action. And I'm looking for that 5-period CCI to pull back below kind of what we consider classic oversold territory. So if you're looking at RSI or stochastics or any of these indicators, they all have overbought and oversold thresholds. So what you're looking for is the primary trend to remain positive, but the counter trend, the shorter term momentum, to turn oversold. So something is sold off too heavily in the short run, and now what you're looking for is for it to turn back into the larger primary trend. And every one of these indicators have kind of a buy threshold level and a sell threshold level. So in this particular case, because we're looking at a bullish trend, I'm looking for that buy threshold level. On CCI, that's -100. That's your buy signal on CCI. So that gets triggered where this first green arrow is drawn. It gets triggered basically at the lows of this pullback. And what I'm looking for is the resumption of that trend. And that's exactly what you get here from this trading signal. And the reason here, what I'm looking for is I want to capture as much of this particular move as possible. And what I'm trying to do is try to enter as close to the bottom as possible, so I risk the least amount possible and try to capture as much of this next move as possible. So when you enter these types of trades, you generally can put a stop below the candle that you purchase the trade with, and look for that resumption of the trend. Because with this specific strategy and this specific set of parameters that I'm showing you, you can usually enter, if not at the lowest candle, usually within 1 or 2 candles of the lowest candle in these types of trend following strategies. That's why this is a strategy that has been in my trading book for 15 years. It's because of how successful it is at identifying the very bottoms on these trend following strategies. So this is something that's a strategy that I've used. This specific set of indicators, CCI, I use the 50-period for the long period moving average and the 5-period for the short period moving average. Now, many of you may have other charting packages, you might have trading platforms. I encourage you to play with these standard settings to start with. See, pull it up on a chart, see how they look, and you can see how quickly these typically identify these trades pretty much near the very bottom candles of a counter trend move. As you can see, nearly all of these trading entries happen at the very bottom of a continuation of that bullish trend. Usually you're not too late or too early with these specific settings. And again, that is why this is a set of technical indicators that have lived with me for the past 15 years in helping me identify quick swing trading trend following setups. Does that make sense, everyone? Please type 4 into the chat window if that makes sense to you. CCI a synonym for commodity channel index. It's just an indicator, just like RSI or Williams %R or stochastics or MACD. It's just another momentum indicator. It's just the one that I have used for about 15 years, and I've just stuck with it because it seems to perform a little better than most of the other ones. You know, you can replace this with stochastics, you can replace this with RSI. I just, you know, over the years after backtesting the strategy with all the other indicators, have found that CCI gives me the best possible performance, and I generally will more likely be able to find that very bottom of that buy signal and get and capture as much of that move as possible. Okay, so I want to walk you through a few things about the strategy, because if you just took that strategy on the surface level, you may not have as much success. So I want to show you a few things that are important when you use this specific strategy. Because as you can see here, this was the chart that I was showing you here before, was this move here to the right, right? As you can see during that time, the momentum indicator remained positive, or the long momentum indicator remained positive the entire time. And we got multiple buy signals, 1, 2, 3, 4 buy signals right here, right? And that corresponded with this part right here, this candle right here, this candle right here, and then ultimately this candle right here. Those were all pretty successful buy signals. And you can see they come one right after the other, meaning you get into one, perhaps you take some profits, get into another one, take some profits, get into another one. You can have multiple back-to-back successful trades on the same symbol using this type of strategy. But just having the long period CCI being positive in itself usually is not enough to get into the trade, because look here, right? This let's start right here. This is really when the or let me find another opportunity. As you can see, the momentum indicator right here turned positive, right? I'm going to try to highlight this box for you right here. During this phase, the long period momentum indicator turned positive. But what I typically need to see is that price action needs to confirm that primary trend. And when I look at the price action here, what I do not see is the start of a bullish trend. So you have multiple areas, right? Here, the momentum turned negative, right? Would I say that that we now have a bearish primary trend? I would argue no, because as you can see, the chart is just moving sideways. And same thing here. When the long momentum indicator turns positive, is that a buy? Is that an opportunity to start a primary trend? I would argue no, because during this entire time, this stock has been trading sideways in this trading range. Now, very briefly, I would say around right here, when the momentum indicator turned negative, that is the first start of a potential bearish trend that has started. Now, that quickly reversed back into the overall trading range. So that was a bearish trend that never generated any trend following signals, because the trend unfortunately didn't last very long. It only lasted a few candles. And then it's only here, once the momentum indicator had turned positive and the stock had broken out from its trading range, it broke out from its trading range, that is when you can start a trend following strategy. Does that make sense, everyone? Type 1 into the chat window if that makes sense to you. Is that just because the long momentum indicator gave you a positive or negative reading is not enough to say we have established a bullish trend or bearish trend, a primary trend. You need to have price action confirm, okay, this starts to look like the chart is sloping higher, higher highs, higher lows. That's the start of a bullish trend. Now I can start activating the bullish trend. So make sure you use price action to confirm your primary trend that the indicator is telling you, either a breakout or breakdown of support or resistance level, or some kind of trend line has been broken. That is usually what you need to see first before you get into the trade. Otherwise, you're going to get false signals. Otherwise, you're going to get whipped out of trades that are basically false trades, okay? Then what you're looking for is also price action to confirm the counter trend move. Sometimes you get pullbacks here in the short-term indicator, but the price action doesn't really pull back. And those are still trading setups, but a lot of times those might not be the best trading setups from a risk to reward perspective, because your risk to reward on those trades just simply aren't very good. So when you have a indicator pulling back and you see the price action has pulled back from that primary trend, that is really when you get some of your best trading setups, especially sometimes when it pulls back to a support level. That kind of gives you and also a strong indication of a potential opportunity here. The more disciplines of technical analysis you can kind of layer onto this, the better. But just to keep things really simple, price action, confirming your momentum indicators, both on the long momentum indicator and the short momentum indicator, are pretty important parts of this specific strategy. Okay. Now, you can then use kind of short-term momentum to also give you a bit of a exit signal. So when that blue or the short momentum indicator goes from overbought to oversold and turns back, that's usually also a sign that the trend following swing trade that you're making is coming to an end, right? So when something goes from positive to negative and then turns back to negative, that kind of gives you an indication to potentially start taking profits on your swing trade. Now, this is really where you can use multiple disciplines to determine kind of when you want to take profits. This specific indicator doesn't necessarily give you the best take profit strategies. A lot of times just using a more classic technical indicator, using a 14-period indicator is perhaps better for identifying taking profit opportunities. And this is better for a trade entry signal. But you can use a combination of these two indicators to give you a sense for when it might be time to start taking profits. I sometimes will use the combination of the two. So when the long momentum and the short momentum both are overbought, that's usually the sign of it's time to start taking profits on a specific trade. So those are some of the variations that you can use with this strategy, not only for trade entry, but also for trade exit. And then lastly, when does this strategy stop working? That's really an important thing, because as you can see, throughout this chart, right, this momentum indicator the long momentum indicator stayed positive this entire time, right? This entire time. However, some of the best trading setups tend to happen early on, right? Early on is kind of when you get some of the best trading setups. And then at some point, what you tend to start seeing is that as price action starts to move higher and higher, especially once you've already had 1, 2, 3, 4 signals, by the time you get to that third or fourth signal, you really need to start looking out for this, because the primary trend, you're at that point pretty late to the primary trend, and you're at a higher risk that primary trend is going to end or reverse, and that gives you a riskier trading setup. So in this particular case, what you see here is that I get a series of higher highs in terms of price, but the long period momentum indicator is starting to diverge from that. And that is usually a good sign that this trend that I'm looking at is very close to being done, or that I will no longer trade setups at that point. So, at this point, this signal, I don't think is a valid signal anymore. As you can see, it only gave you a couple of bars and quickly reversed lower, because at this point, this primary trend is exhausted. This big trend is exhausted, and buyers are kind of no longer coming in and buying, right? Meaning there's more of an equilibrium at this point between buyers and sellers, and maybe even sellers are starting to get a little bit more stronger at this point. That divergence gives you a good sense of when that primary trend is ending. And that is also important to know, because you don't want to just follow this blindly. You have to know when is the best time to get into these types of setups and when it's not. And when you're too late to the game, you need to know that and not trade these setups. So this is something really important to pay attention to here as well. So now that we've kind of gone through the strategy, what I really want to do is show you how you can automate all of this using the OptionsPlay platform, because this is the scan that you may not have known is already built into the OptionsPlay platform. So what you see here on your OptionsPlay Ideas platform is at the very top, you have your Ideas section. Within Ideas, you have technical ideas, cover calls, credit spreads, and short puts. What we're going to cover here is the technical ideas section. Now, this is something that we don't spend a lot of time showing this to you, so I wanted to take some time and dissect and give you an understanding of how to utilize this tool. But one of the most important things that you can do is basically sort and filter all of the different technical scans that we scan for on a daily basis. And we're actually in the process of revamping this to make it a little easier to navigate so that it's easier to find the trend following strategies versus the counter trend strategies. But I did want to show you this trend following strategy that we have built into Options Play. And this is one that I use on a weekly basis when I'm looking for trading ideas to find these kind of trend following setups. So when you sort and filter, so you go to trade ideas, go to technical ideas, and then you click on the sort and filter button. When you click on that button, it'll give you opportunities to sort based on market cap size, IV rank, liquidity, sectors, and the scan itself. The first thing I usually like to do if I'm trading options is I like to remove non-liquid symbols because I'm not going to trade options on anything that's not liquid. So it doesn't even make sense for me to look at ideas on stocks that that where I could potentially trade the stock, but I wouldn't be able to trade the option. So I remove those. And just for simplicity's sake, I also remove somewhat liquid as well, just so that we can look at the very liquid names, the names that we all recognize that we can easily trade options on. And then the other thing I look for are specific scans. As you can see, we have multiple scans in here, and there are specifically two that I want you to pay attention to. The CCI rally in bearish trend and the CCI dip in bullish trend. And this is kind of self-explanatory, right? What I'm looking for is a dip in the bullish trend. That's kind of that counter trend move that I'm looking for a bullish trend following strategy, or I'm looking for a rally in a bearish trend so that I can trade that bearish bearish trend following strategy. So you have both bullish and bearish trend following strategies that are built into Options Play. And if you do, and if you click on those, what you get, you filter 140 different trade ideas for the day down to just 9. Now, these are the handful of setups that I think are going to be the most interesting from a trend following strategy perspective. And as you can see, I have 9. And what I usually like to do is I usually like to sort it based on relative strength, because this gives me an understanding as to which ones am I going to be potentially late to the game on and which ones am I potentially early, right? Because if, let's say right now, out of the 9 ideas, as you can see, they're all bearish ideas. At the moment, we don't have any bullish ideas, or at least no stocks that meet the bullish criteria. Maybe if I did something somewhat liquid, I'll get some of the bullish ideas. I actually don't. They're all bearish ideas here today. So what you see here is that when I sort it based on based on relative strength, the ones with the score of 1 tell me that I'm really late to the game. These are some of the worst performing stocks in the market. So if we pull up a chart here of CVS, we'll take a look at that. As you can see, I'm really pretty late to the game here, right? And this is already, it's a stock that a gap lower here is rallying a little bit, and maybe this will continue, but I'm pretty late to the game. And that's something that I usually want to stay away from. I usually work my way down the list from the strongest stocks and work my way down. As you can see, this is the stock that recently Dollar General, I would say, started that bearish trend here, right? And you can see our bearish trend indicator turned negative here on this day, which was April 16th, right? So we're talking about, 3 weeks ago, we had a bit of a bearish trend that has started. And what we've seen here is a little bit of a counter trend move on that indicator. And now what looks like is about to resume that continuation lower. So I'll just bring up this chart a little bit higher, and I'll kind of give you this trend following setup. So here I have 2 CCIs. I have the 50 period CCI and I have the 5 period CCI. As you can see, the 50 period long period CCI is firmly negative. It turned negative back here on 415, right? And not only did it turn negative, it broke below that support level. So we've got that confirmation of the start of the bearish trend. And this is the first time that short-term momentum indicator turned overbought and is now turning back, back into the direction of the bearish trend, right? So now what we've got is the resumption of that bearish trend at the moment from the CCI indicator. What I'm looking for this is to continue moving lower from here. So this is a very classic setup. And I would say, as you can see, what you're getting in is the first setup, right? Many times you may not get in at the very first setup. Many times you might get in kind of fairly late to this game. So this is something that when you look for these stocks that have a relatively higher strength, you're going to be able to generally identify these setups earlier. If you look for ones with a very low strength, those are the ones that you're pretty late to the game. I'll avoid those. And vice versa, if you're looking for bullish opportunities, I start with the ones with the lowest strength first, because that helps me identify potential ones that are early to the game. If I look for, trend following stocks where the strength is very high, then I know that I'm going to be very late to the game and I have a lower chance of success on those types of strategies. Does that make sense, everyone? Please type 1 into the chat window if that makes sense to you. So we'll take a look at another one. Let's look at Clorox real quick. I just want to show you a couple of these. Here, move that one. So here's, let's go back to this. So here's another one. Now, this one, I'm not particularly as keen on, right? It meets all the criteria. As the long period CCI is negative, the short period CCI is overbought. But as you can see, it recently had this big gap lower here. It's still a valid trade, but not my favorite, especially when the trade happens immediately after a big gap lower. This gap lower is probably on earnings. So this is one where visually, when I look at this chart, I probably wouldn't take the trade, especially since it didn't quite make a new lower low. This looks like potentially what could be, sideways chop going forward. So this is one that I probably will avoid. And this is kind of how I can quickly visually look at a chart and within a couple of seconds know whether or not this is a valid trade. That one I just showed you here before was probably the first one. This is another good trading setup, right? So this thing turned negative back here on 4/16. It's very similar trading setup, right? You have a trading range. The stock has been in a range. It broke below that range. Momentum can turn negative. That confirmed the primary trend. And this is the first sell signal since the start of that trend, right? It triggered it right here. We got above that 50, that overbought condition, and just today or just as of last night, fell below that. And this is the first trading day that we can enter this particular trade. So this is a pretty good another trading setup. Now, IT Gartner is somewhat liquid, so potential opportunity here as well. But these are the types of trading setups that I look for. The start of a primary trend. In this particular case, it's a bearish trend. You got that small counter trend move, and now you have the opportunity to get into this trade. And this is really where you can use options play to find yourself that trading strategy, whether you want to buy a put spread or if you want to look at selling a credit spread. Any of those are opportunities that you can use to quickly set up a trading strategy, click on the trade button and enter this trade into your broker's platform. Or if you have a TradeStation account, you can connect your TradeStation account and execute that trade into your TradeStation account directly from Options Play. But the goal here is to help you find these trading setups, these trade entries, without having to pull up a technical indicator. You don't have to use these indicators. I use them just to confirm them, but you really don't have to, because just visually speaking, you should be able to quickly gauge whether this is a valid signal. Once you kind of go through these a few times and go through a few examples, you eventually don't need the indicators themselves. And I prefer not using the indicators, because the more indicators you draw on your chart, the more paralysis analysis that you tend to have, or analysis paralysis that you tend to have, the more conflicting things that might happen, the more you might kind of introduce your own biases into the indicators. By removing the indicators as much as possible, that's really when you can, get a sense for the price action of the chart. And that usually is far more important. Looking at price action is far more important. And I think that's a much better way to trade. And these scans are designed so that you don't have to have indicators on your charts to find these opportunities. The scans automate that for you so that you can just look for the opportunities and quickly identify whether it's a trading setup that you want to take or not. And lastly, I want to leave you with, make sure that no matter what strategy you trade, you use the risk and investment calculator. You calculate the appropriate number of contracts that fit your portfolio size so that no matter what happens, you will never come out of a trade and say, I lost too much money on that trade, because you should always know how many contracts is suitable for your portfolio. So even if the trade doesn't work out, the loss that you have on that trade is a suitable amount that you can survive and you can continue trading another day. If you are ever in a position where you say to yourself, I lost too much money on that trade, it's not the idea that was bad, it's the how many contracts that you traded that was a bad idea. And the best way to control that is to make sure that you use your risk and investment calculator and put into your profile what your account size is. Risking 2% of that account, it will automatically calculate for you. In this particular case, it'll tell me I can trade 2 contracts where my max risk here is $2,000. That stays within my $3,000 max risk limit, and that will make sure that I do not risk any more than that on my trade. So if this trade, makes the full max loss, I'm risking 2% of my total portfolio or less, something I can survive, something I can continue to trade from and trade another day. That's really the key to success in my trading strategy, utilizing these tools that are available to you here at Options Play, finding the trading setups, using the technical scans, using the trading tab to structure the options trade, and making sure that I stay in my lane with regards to the number of contracts so that no matter what happens, I never will blow up my portfolio. Even if I have a string of losers on these types of trades, I will still be able to survive that because I'm using proper risk management. And you need to have all 3 things in your portfolio in order to succeed at trading. But it all starts with an idea, and hopefully this gives you that foundation. This gives you the knowledge of how you can build a trend following strategy yourself. With that, what I'll do is I will open this up for Q&A. Before I do, just to review what we've learned: trend following versus counter trend. Make sure you understand the difference between the two, the pros and cons. Don't limit yourself to one or the other. Today we covered trend following. Next week we're going to cover counter trend, a very different style of trading to trend following. So we'll kind of cover what indicators I use specifically for that, and what are the tips for trading that. Then back-tested strategy, really proven strategies that have worked, specifically the CCI, the 50-period and the 5-period CCI, and how to automate this using Options Play. Make sure that you find the tools that allow you to automate these types of strategies, because that's how you're going to be able to stay objective and remove that subjectivity, remove the bias that you already have going into a trade. That's been the best way to find kind of trade ideas that you are not necessarily emotionally attached to. When you get emotionally attached to a trade, that's usually when we have some of the worst outcomes in the long run. So there's a Q&A button at the bottom of your screen. If you have any questions, please type your questions in the Q&A window. And what I will do is make sure that both the recording and the slides will be available by this weekend, that you can watch at your own pace. Make sure you understand everything that I'm showing you, how to set up your Options Play platform to find these ideas. And you can sign up for your free 30-day trial at optionsplay.com/signup, or point your phone to that QR code and sign up for that free 30-day trial and get access to the platform that does the scanning for you here. So let's take a look at the questions that we are seeing here. For those, there are a couple of questions asking what does CCI stand for. It's the Commodity Channel Index. So it's just an indicator that many traders will use. Not many platforms will allow you to kind of overlay 2 indicators in the same panel. I just happen to use a platform just to show that to you. I don't think it's critical to have 2 indicators on the same panel. I was just showing that to you visually to show you the strategy. I actually think that for most traders, you shouldn't use the indicators. You shouldn't look at the indicators, because the indicators open up for interpreting it a different way, it opens it up for you to, change things or take, bring in your own biases. By removing the indicators and just using the scans, you actually remove all of that subjectivity and you get a very objective buy or sell signal. And that's really what you should follow. And I think a lot of traders spend too much time looking at charts, doing indicators, that they actually get more overwhelmed. And many times they don't follow their indicators to a T. Sometimes you can get an idea and you say, oh, it's almost there. Let me take the trade. You want to avoid that by not by using the automation that's available for available here at Options Plan. What sort of time period are you looking for the CCI 50 and 5, hourly or daily? You can use it on all time frames. When I was trading E-minis, I was using tick charts, 1 minute charts, 5 minute charts. Trading FX, many commonly use it on 15, 30 minute, 1 hour, 4 hour charts. And now for equities trading, I use it on daily charts. So I have used this very specific strategy on just about every single possible time frame and is valid on every single time frame that you trade on. That's why it's been so versatile, and that's why it's been with me for 15 years. It is the longest standing strategy in my trading toolbox. Can you use this setup with SPX to understand the trend of the market? Yes, you can use it for any asset class. Anything with a price, you can use this strategy for. Do you use SMA? You don't need SMA for this. You just need price action and those two indicators. Where can you get all our webinars? You can get all our webinar recordings on our mobile app. If you download the Options Play app, you can see all of our webinar recordings on our mobile app. Have you found any time frame to be better than another? No, that's really the great thing about this particular strategy, is that I have used it across every single time frame successfully across multiple asset classes. This is why this is the single most used strategy in my toolbox and why it's been with me for 15 plus years in my trading. Can you show how you pick the two CCI indicators in the chart? I'm not sure what you mean by how I pick the two CCI. It's just the 50 period and the 5 period. Do the CCI 50 fit for day trading? Yes, it does. What is the risk reward that we should apply? That's a really good question. The thing about these types of trend following strategies is that they don't have a fixed risk reward. As many times you're looking at a new trend, you can't really quite project out, what the risk reward is going to be consistently. So it's really something that we have to look at the indicators and be nimble as to when we get in and when we get out. The momentum indicators will give us a good sense for when that primary trend is starting to end. Sometimes traders, what I also will see traders do is that, when they get this initial sorry, let me just back up. When they get this initial entry signal, what they will do is they will basically enter maybe a quarter or a third of the position at that first signal, and they don't actually exit. They just stay in that trade, and they'll enter another 1/3 here and another 1/3 here, and until they start to see this divergence here, between the primary trend and the primary momentum indicator, that's when they'll exit all 3 trades, right? So they'll kind of stay in these trades. They'll kind of keep adding to that trade until they kind of get that primary trend has come to an end. That's kind of their signal to get out of all 3. That's another way that you can trade this, a very popular way. And I'm actually an advocate of that kind of trading, because what you're doing is you're basically testing the waters to see if this primary trend continues, right? And if you're correct, you have a little bit more confidence to enter that second one. You have a little bit more confidence to enter that third one. And by the time you finish, you've kind of established kind of your full position, or maybe even greater than your full position, right? Maybe you enter half your position here, enter half your position there, and by the time you enter the third one, you've now have a 1.5 of your original position that you typically have. You know, sometimes by the time you're done, you kind of have double the position size that you have. So these are some of the variations that I teach in my profitability class, where we talk about kind of position sizing, position management, and how to become a profitable trader. And these are some of the techniques that are used alongside this type of strategy to kind of reach that profitability. Can you show SPY with these indicators? Sure. Give me 1 second just to set that up. So here's SPY with that indicator. I'll kind of blow it up a little bit, right? So this is a good, you know, the last 6 months was actually a really good case study for this, right? You know, momentum here turned positive right here, but from my perspective, that's not quite enough because until this kind of broke, whoops, sorry. Until this broke above that level, I would say, you know, the trend didn't really start until then. And some people could even argue that the trend didn't really start until, you know, this gap higher, right? This is really the start of that bullish trend. So you've kind of got the confirmation of the breakout of the trend line, and momentum indicator is the long momentum indicator is positive. That's your start of this trend. As you can see, there are multiple pullbacks here that didn't quite pull back to that trading setup, right? It's really here was the first entry, and that first entry was right here. Oh, sorry, keep doing this. The first entry was right here, right? That was your first opportunity to get. You know, so you could potentially say, okay, I'll establish a small position there. I'll add to the position here. I'll add to the position again here. I'll add to that position again here. And I'm trying to see where, you know, you start to see some divergence. I would say you start to see some divergence here. Higher high in price no longer being confirmed by higher high in momentum. You know, do you get out at the very top? No, but you get out near the very top, right? Because this divergence kind of keeps getting worse and worse as you go along. As you get higher highs in price, no longer getting higher highs in momentum. And what you see is that, you know, these subsequent buy signals become far worse in terms of opportunities as the divergence gets worse and worse. You know, and you're also nearly 6 months into a rally. You're pretty late to the game there. That's really when things start to fail and you start to see, you know, let's say, for example, this was the last buy signal here. Or rather, this was the last buy signal. These are your last 2 buy signals right here. This one, right, this particular candle, and this one right here, right? So as you can see, as you got very late to the game, higher highs in price, the long-term momentum got pretty bad here. That's a good sign that you're very late to the game and these are no longer valid signals. So you can see that's when things started to reverse lower here. You know, and right now we've got a positive momentum here again, but we haven't broken out yet, meaning we haven't established a new bullish trend. We're kind of sideways at the moment, right? So even if this short-term momentum pulls back here and gives me a buy signal, it's not a valid buy signal just yet until the S&P 500 breaks out above that 525 level, and we can say price action and momentum has confirmed that bullish trend. Now we can start looking for trend following trading setups. So hopefully this gives you a review of kind of this particular strategy. You know, here's a bearish opportunity, right? So here, as you can see, I would say, you know, price action turned negative. We broke below support. Price action was negative. And right here is when we got a bearish signal, right? This is when the short-term momentum turned overbought and then gave us that bearish signal right here. Now, you know, you could argue that this got back into the range and this is no longer a bearish signal, but I would say that, you know, you didn't quite get back into the range far enough to really validate it. But, you know, this is really kind of where you did get a sell signal right here. And notice how close you got to the very top on the sell signal relative to the actual move. You know, this is really why I love this trading setup. It's because it really gets you in at sometimes the very bottom candle. as you can see in every single setup that I've sent you, you got the basically very bottom candle of these resumption of the bullish trend. And this is why this is the most powerful trading system in my book that I've used for 15 years. And I don't know why it took me so long to share this with you, but I'm glad that I'm here sharing this with you and doing some more on technical analysis and focusing, some on technical analysis. That is the feedback that you guys have given me, that you want more on the technical analysis side. This is really where I started my career on technical analysis, and I'm sharing a little bit more with you guys here. So with that, thank you so much. I hope you guys have a great trading day, and I hope to see you guys here next week, where we will be covering counter trend trading strategies. How do we identify, this big move here from the very bottom? How do we identify potentially this sell-off from that very top? So with that, have a great trading week, and I'll see you guys here next week.